Hi Trader, Tina here once again from ShortMeTina.com with my daily recap. Happy Tuesday. Before we get into a recap of the overall markets, let me welcome you. If this is your very first time tuning into a ShortMeTina video, I'd like to say welcome. Do us a solid in the comment section. Drop us a comment. If you are returning, I would like to say welcome back again. Do us a solid in the comment section. Drop us a comment. Say hi. You know, generally, I usually say hi back. All right, so let's just kick it off with a recap of the overall markets right now. What you are looking at is the S&P 500, the SPY daily chart dating back to around 2017. So it looks like we closed at 290.02 today. The low clocked in at 289.95. So we closed relatively close to today's low on low volume, but nonetheless we close closer to today's low, considering our high was around north of 293. So heading into tomorrow, pay attention to that low of 289.95. If we break that, we might drift a little lower, but that's not too much of a concern for me. What am I paying attention to? Like I've indicated in the previous videos, I'm paying attention to the range, right? So the range here for the past few days since the market dropped has been specifically 281.72. That's the lower end. The upper end is 294.15. Now, putting that aside, if we look at the entire chart and we pay attention to overall support and resistance levels, more or less it comes close to this range, right? So I have supported around 280, and I have actually, let me reframe that. I have supported around 280 to 282. I have resistance at around 293 to 295. So this range that we've been trading in after the pullback, for the most part, is smack dead in the middle of that support range that I identified and that resistance range that I identified. Coincidentally, the 200-day moving average is also around 280. So again, I'm not paying attention to these sort of gyrations in the middle. If the market is at 284, no concern for me. If it's at 290, if it falls within this range or the 280 to 295 range, not too much of a concern. For me, it's when we either breach above or below those levels that things start to get interesting. For example, if we pierce through 280 on volume, that should be a sort of a light bulb moment in your mind, because we have not really breached that level for any sustained period of time, right? That serves as solid support in my area. Conversely, if we penetrate 295 and sustain that break, then we are in relatively new territory, and again, light bulb should go on. So again, I'm not paying attention to these minor gyrations. You know, if we're trading at 285, 289, 292, not my concern. It's when we breach those broader levels, right? That support of around 280 to 282 and the resistance of 293 to 295. I hope that makes sense. Full disclaimer, full disclosure, I am short the market. What else? All right, and then we have the IWM daily chart dating back to 2017. We closed at 149.11, slightly down on the day, similar to the SPY. And like I've been indicating, or as I've been preaching for the past few weeks, not concerning myself with stuff that's going on in the middle, because a lot is going on in the middle. I'm just going to pay attention to those levels of extreme. For me, that would be support and resistance, and those numbers for the IWM, support comes in at around, I believe I said 144 to 145, resistance comes in at around 160. So granted, we're sitting here at 149.11. Does that concern me? Absolutely not, because it's not 144 and it's not 160. Once we get to 160, for me, things start to look a little differently. If we get to 144 and breach that, things start to look differently. Anything else that goes on, I could, honestly, I could fall asleep and not care, because I really don't. When it gets to those either extreme points, then for me, I perk up and things look like they're going to get going. So if you're trying to find a way, this is sort of a side note, if you're trying to find a way to not really get overwhelmed and fatigued in the market, you might want to just find your price points and consider everything else in the middle, like I do, as noise. So that's what I'm paying attention to with the IWM. What else? All right, and so I want to update folks on some of the trades that we actually took in the premium member community and was actually successful on. I want to update folks in some of these trades because I'm actually still in a lot of these trades. Why let go of a trade if it's showing you a profit? So let's kick it off with ticker ZNGA daily chart. We're up about north of 2% on the day. We've retreated some from our 52-week high, I believe, of 665. So we've pulled back some. I see a quote here of 576. Let me say this. No stock goes up in a straight line. No stock goes up in a straight line. So full disclaimer, full disclosure, we did take this trade in the premium member community. We got into this trade right before that November run-up around the low to mid threes. So even though we've retreated some from that 665 level, we're still very much so in profit. And again, my motto is, why let go of a trade that's showing you a profit? Granted, you want to take profits along the way, but you want to hold on to them because you don't know how far they're going to go. For me, I think Zynga has the possibility of getting to 10 if we have a continued bull market. And right now, although on some levels we're breaking some key support levels, for me the chart still looks technically good. So let me explain to you what I see really quickly. Again, this is a daily chart. Let's focus in on, let's start in 2014 to present. So that's about 5 years. In 2014, we topped out at around $5.90. You had this pullback. We spent a few years trading sideways. And again, in November, December, where we caught it, then the stock started to run up. So back here in May of 2019, we started to revisit price action we have not seen since 2014. So for about 5 years or 5.5 years, that's very bullish. So even if I didn't take the trade around here, I definitely would have taken the trade with this breakout here. Not to mention, after the stock broke out, you saw that quick run up to around 650. We pulled back to, let's call that the pivot, the mean, the base of around 580 to 590. We shot back up to around 665 again, making new 52-week highs. We pulled back to 580 and then we cratered. We actually fell through that level. And let me zoom in so you can see what's going on now. Sitting here at 576, we tried to back test that area, going as high as around 583. We got very close to then pull back. So for me, that's very meaningful. Granted, we should be above those levels, but for me, sitting below does not signal the end of the day for Zynga, in my opinion. I'm going to look for continued push above 580. And again, if the stock market continues to trend higher, expect Zynga to follow suit. Right now, again, the chart remains technically intact, and I still have that $8 end of the year price target. Granted, we have a lot, we have some steps to go. We have a bit of work to be done. But again, if this market starts charging along, $8 will get here, in my opinion, in no time. If not the ending of 2019, the beginning of 2020. So far, technically, it remains intact. What else? And then update folks on ZTS daily chart. Do I still like it? Obviously, it's not acting as sluggish as Zynga. It's actually really charging on. Obviously, I still like it. It's on my free watch list. We're sitting here at 126.05, continuously making new all-time highs. One as high as 127.37. Remember what I said is best to buy stocks or look to buy stocks making all-time highs. Generally speaking, they continue to make all-time highs. So where do I see ZTS going? Even despite the craziness of this market, it's still making all-time highs, showing relative strength. In my opinion, it's a stock you want to hold on to no matter what. I see 150 at some point in the near future. Again, we have a ways to go, but right now, again, stock remains in a bullish uptrend. You can see it here. Again, it's the daily chart. Full disclaimer, we got into this trade right around here. I want to say in the low 90s. You saw the shoot up, consolidation, breakout, consolidation, breakout. Perhaps it's about to consolidate again for the next leg up. So granted, I probably wouldn't buy here at 126, but I still see this stock hitting 150 at some point. I still like it. What else? All right, Disney daily chart off marginally on the day. I see a quote here of 135.15. Another update, another stock that we got into, another stock that I like, another stock that I am still holding. Again, why let go of a stock that's showing you a profit? It's ridiculous. So daily chart, stock eventually gapped up. Again, we got into this trade in the low 100s. So yes, it is a little bit off from the most recent 52-week high of 147.15, but we're not in horribly bad shape, right? We're sitting here at 135.15. Can it retrace more? Absolutely. But for me, I would look at those retracements as a possibility to add to my already existing position. Worst case scenario, we filled this gap here of around $117 and $118. Boo-hoo. I mean, look, the stock ran up from 90 to 100 and close to 150 in under a year. Like, this is a large cap stock. This is not a small cap stock. So for the fact that it can even make such a movement, for me, shows that momentum is on Disney's side. So I still like it. Granted, we got close to 150 and that was my target more or less, but I do see it at some point retesting 150 with a continued bull market. Definitely a $200 stock. No ifs, ands, or doubts about it. In fact, if it pulls back, I will be adding more. Disney doing good things, in my opinion, executing. It should be in you shouldn't even trade this. Should be in everyone's long-term portfolio. What else? All right, and we have JD. I see a close here of 31.42. Am I still in JD? Yes. Have I thought about selling it? I have, only because considering everything, I think it should actually be at about 35 right now. And so I'm just paying attention to the amount of time I've actually been in this trade. But you know what? Showing a profit, sticking to sort of my rules and my method, why let go of a stock that's showing you a profit? At any rate, it's off marginally on the day. Again, 31.42 is the quote that I see. Full disclaimer, we got into this trade around 1921. It hit support around here. So we've been in the stock for a while. Not an entire year, but nonetheless a while. But who cares, right? If we got in at 1920 at 40, that's 100% gain. I'll take 100% in under a year any day of the week. So what can get this going? Obviously, we need more buyers to step in. But jokes aside, what will get this going is if we can make a powerful move above 32. And it seems like 32 is real resistance for JD. So the minute that we can get some buyers to step in, drive this above 32, very little overhead, I can see us hitting 35 in no time. So still bullish on JD. What else? All right, and let's wrap it up and round it out with ticker AMD. It's off about 2% on the day. Well, a little over 2%. I see a code here of 3072. I like AMD. For me, this is one of those stocks that can pull back 10, 15, 20% in 2-3 weeks. It can also put up 50, 60% in a short period of time. Do I think the run is over? No. Do I see it pulling back? Perhaps. So with AMD, this is another trade, and I haven't spoken much about this one because it was actually a recent trade we got into, I want to say last week or the week prior. We used the market weakness, right? We used this pullback and this sell-off here to get into the stock, I believe around 27 or 28. Unbeknownst to me that within 4 to 5 days, the stock would be trading at close to 36, giving us about 25% in gains in a relatively short period of time. Stock has since retraced. Do I still like it? Yes. At this point, again, it could perhaps pull back to the low, maybe not the low 20s, but the mid 20s. So that's a real possibility. But look at the setup here, right? This is a daily chart dating back to September of 2018. Looks like it wants to break out. If it gets past $35, this is easily a $50 stock in my opinion. Look, very little overhead. Just go back. How many years you want to go back? Right now we're back to 2016. Very little, not even little, there's no overhead. So again, once we get past that 35 level, I see this at some point hitting 53. And I want to make a note of caution here before I end this video. Look, I've just highlighted several stocks. I think every stock that I've analyzed, let me see, SPY, IWM, Zynga, ZTS, Disney, AMD, JD, that's about 7 stocks. All of these 7 trades that I've mentioned, we've taken, including the IWM, we've taken a trade in all of these securities and we've been profitable in all of them. Does that mean we are always right? Absolutely not. We are not always right. And anytime there's a teachable lesson in the trades that we get wrong, I usually highlight them, right? So I did it in NEO, I did it in our Tesla short. So I do highlight the trades that we get wrong if they're teachable moments. So don't sit here and think that I get all these trades right. I do not. What I tend to do though is when I'm in a trade that's showing me a profit, I like to hold on, and I also like to take trades where I know I'm going to get a good return on my money, right? So I'm not looking for those, $1 move or 1 or 2% moves. Like, we're looking for 9-10% plus moves. Okay. So I just wanted to note that for transparency. So that's kind of it. Let's wrap it up. Tina here once again from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do 3 things for me. 1, comment in the comment section. Are you still out the markets? Are you in the markets? What about Zynga, ZTS, Disney, AMD, JD? What are your thoughts? Comment in the comment section. That's the first thing. 2, I do videos Monday through Friday. If you want to be notified, ensure you are subscribed to our YouTube channel at ShortMeTina. And lastly, my friend, I've been trading for well over 15 years. If you think you can learn anything from me, then head on over to ShortMeTina.com. Sign up, become a member. Thank you for listening. And as always, thank you for the support. I will talk